Marc Lichtenfeld just claimed something huge. In his presentation called Elon Musk's Endgame, he claims Wall Street sees a potential $34 trillion investment rush by 2030. And as a result, one $5 stock has a chance to 100x, going from $5 to $500. In this video, I investigate the claims being made and reveal the stock being pitched so you don't have to buy Marc's newsletter. No paid or proprietary info is given away in this video. It's all guesswork based on clues in a publicly available sales presentation. Before we do anything, let's check out Marc's recent track record. He recommended Stag Industrial back in November 2020, and this stock has been up and down but is up slightly overall, while paying out a nice dividend. In February 2024, Marc recommended two energy stocks, and the first was Cord Energy. This stock has done poorly. The second stock was Permian Basin Trust, and it's up a little while paying a dividend. In January 2025, he recommended two stocks, and the first was Enterprise Products Partners, and it's basically break even. The second was Wheaton Precious Metals, and this stock has done really well in the last 8 months and is up 80%. Let's break down the teaser and figure out what Marc is talking about here. This is a pitch on autonomous driving. Let's start with the claims that Marc said are true. First, Tesla's current market cap. The presentation states Tesla is worth only $1 trillion right now, and that's essentially correct. As of September 2025, Tesla's market cap is sitting at around $1 trillion according to multiple financial sources. Second, the robotaxi launch in Austin. The presentation talks about Tesla launching robotaxis in Austin in June 2025, and this actually happened. Both BBC and CNBC reported that Tesla's robotaxi service did roll out in Austin on June 22, 2025, using a limited number of Model Y vehicles. Third, Tesla's full self-driving miles. The claim that Tesla has logged over 3.6 billion real-world miles is accurate. Tesla North reported in March 2025 that Tesla's FSD had indeed surpassed 3.6 billion miles driven. And fourth, Tesla's safety statistics. The presentation mentions that Tesla vehicles are significantly safer than average, and Tesla's Q2 2025 safety report does show one crash for every 6.69 million miles with autopilot engaged, compared to the US average of one crash every 0.70 million miles. That's roughly 10 times safer. Now let's look at things Marc said that are untrue or grossly exaggerated. The presentation claims that Dan Ives of Wedbush Securities believes Tesla shares could double or triple by the end of this year, with longer-term targets of $3,000 plus per share. Here's what Dan Ives actually said. His current price target for Tesla is $500. And here's the kicker. In April 2025, he actually cut his price target from $550 to $315, a 43% reduction. So not only is the presentation inflating his target by 6 times, they're claiming he's bullish when he actually became more bearish. But perhaps the biggest whopper in this entire presentation is the claim that the autonomous vehicle market represents a $34 trillion opportunity by 2030. I searched through multiple market research firms to find where this number comes from. Statista claims the autonomous vehicle market will reach $2.3 trillion by 2030. NextMSC estimates $614.88 billion by 2030. Precedence Research, being the most optimistic, predicts $4.45 trillion by 2034. Not even 2030. So we have credible estimates ranging from about $600 billion to $4.5 trillion, and this presentation is claiming $34 trillion. That's anywhere from 8 to 55 times higher than the actual market research suggests. I couldn't find a single credible source supporting this $34 trillion figure. It appears to be completely made up. The presentation tries to justify this by comparing it to previous technology booms, claiming the internet created $10 trillion in wealth, smartphones $15 trillion, and AI $20 trillion. But again, these figures lack any credible sourcing and appear to be inflated for dramatic effect. Let's look at the clues for the self-driving stocks Marc wants us to buy. He actually gives away 2 for free. The first is Tesla, which he claims could 30 times. That would give Tesla a market cap bigger than America, so I doubt that happens. He claims if Tesla is too volatile for you, you can invest in the Global X Autonomous and Electric Vehicles ETF. However, this ETF has been terrible for 5 years now, so I personally wouldn't invest. Then Marc teases a stock he doesn't give away. Here's the clues. For example, one cutting-edge company just launched America's first autonomous freight corridor in Texas. I don't know if you know this, but America faces a 60,000 driver shortage. Supply chains lose $9 billion yearly to human error. This is a solution that is needed, is already operating today, and will only continue to grow as the autonomous vehicle boom plays out. I'm going to reveal the stock in 15 seconds, but before I do that, I want to remind you to sign up for my free report on the top 10 stocks to buy and hold forever. This report comes with no gimmicks, no get-rich-quick nonsense, just solid long-term investments you can actually feel confident owning. Click the link in the description to get your copy right now. The stock being pitched by Marc is Aurora Innovation, which creates products for self-driving trucks. Here's what to know about this stock, and after I'll tell you if I'd buy. Aurora Innovation, founded in 2017 by Chris Urmson, Sterling Anderson, and Drew Bagnall, is a self-driving technology company with a mission to deliver the benefits of autonomous driving safely, quickly, and broadly. Its core product is the Aurora Driver, an integrated system that combines advanced sensors, including its proprietary FirstLight FMCW LiDAR, along with software and powerful compute to enable vehicles to operate without human drivers. Headquartered in Pittsburgh and Mountain View, Aurora also maintains offices in San Francisco, Texas, Bozeman, Seattle, Louisville, and Detroit, positioning itself across key hubs of technology and transportation. Aurora Innovation has built a wide network of partnerships across the trucking, logistics, and technology sectors to support its growth and commercialization strategy. In the trucking and automotive space, the company collaborates with OEMs such as PACCAR and Volvo Trucks, along with freight operators including Hirschbach, Schneider, and Werner. On the logistics side, Aurora works with companies like FedEx, Uber Freight, and Ryder to integrate its technology into large-scale freight operations. Its technology and strategic partnerships extend to industry leaders such as NVIDIA, Continental, Toyota, and Uber, which helps strengthen its ecosystem. Aurora's business model centers on licensing the Aurora Driver, its proprietary self-driving system, to fleet owners and OEMs, while also offering a driver-as-a-service model that provides autonomous trucking capabilities directly to logistics companies. In the second quarter of 2025, Aurora Innovation reached a major milestone by launching its first fully driverless commercial operations on the Dallas to Houston route, successfully completing more than 20,000 miles without a safety driver. The company also validated driverless night operations during this period, a breakthrough that effectively doubles the potential utilization of its autonomous trucks by enabling continuous, around-the-clock service. To support its growing network, Aurora opened a new terminal in Phoenix and has outlined plans to expand its routes further, with lanes connecting Fort Worth to El Paso and additional operations out of Phoenix expected by the end of 2025. Aurora reported its first revenue in the second quarter of 2025, generated from both driverless and operator-supervised operations, marking the company's transition into early commercialization. Despite this progress, Aurora posted a significant operating loss, which included $55 million in stock-based compensation, reflecting the high costs of scaling its autonomous technology. On the financial side, the company strengthened its balance sheet by raising approximately $331 million through at-the-market offerings, ending the quarter with enough liquidity to extend its runway into the second quarter of 2027. Operating cash usage totaled $144 million, with an additional $7 million allocated to capital expenditures. Aurora's second quarter 2025 earnings reflected both progress and market caution. The company reported $1 million in revenue, significantly beating expectations of around $503,000, yet its stock still dipped about 3% to $5.97 following the release. The share price continues to show high volatility, with a beta of roughly 2.5, underscoring its sensitivity to market sentiment. Analysts remain divided on Aurora's outlook, with price targets ranging from as low as $3.59 to as high as $15, highlighting the uncertainty around its path to profitability. Still, the company has attracted attention from growth-focused investors and has been included in extreme growth technology portfolios, reflecting its long-term potential despite near-term risks. Aurora Innovation holds a strong first-mover advantage as the first company to operate driverless Class 8 trucks commercially on U.S. roads, establishing itself as a leader in autonomous freight. Its operations to date have demonstrated a nearly perfect safety record with close to 100% on-time performance, which is critical for building trust with partners and regulators. By successfully validating both day and night operations, Aurora has effectively doubled the potential utilization of its trucks, a key step toward proving the efficiency gains of its technology. Backing this progress is a solid capital position, with $1.3 billion in cash on hand, providing the company with the runway needed to continue development and scale its operations in the years ahead. Aurora faces several risks and challenges as it works to scale its autonomous trucking business. The company continues to post persistent losses and carry high R&D expenses, which place pressure on its path to long-term profitability. Regulatory uncertainty remains a concern, particularly in Texas, its primary operating state, and in other regions where it plans to expand. While Aurora has highlighted its safety record, the lack of detailed public data on system failures invites ongoing scrutiny from experts and regulators. Competition is also intensifying, with rivals like Kodiak Robotics pursuing similar markets and routes. In addition, Aurora has yet to fully validate its technology under adverse weather conditions, an important step for nationwide deployment. Finally, its operations are still limited in scale, with only 3 fully driverless trucks currently in service, underscoring the early stage of its commercialization efforts. So what do I think? Aurora has been pushed by a few different stock pickers since the spring. The most recent pitch has centered around its connection to NVIDIA, and the idea that it could help NVIDIA break into robotics. Marc, however, frames the opportunity around the broader autonomous driving market, which I believe he greatly overstates. I haven't recommended Aurora yet, even though it has been promoted consistently since the spring and throughout the summer. While I think the technology is fascinating and potentially game-changing, I just think this company is still too far away from meaningful success to justify an investment. So far, my instincts have been right. Aurora's stock has steadily lost value. And when you consider that companies like Waymo, backed by Google, have scaled back or abandoned parts of their autonomous driving divisions, it really makes you question how a much smaller player like Aurora can survive. If a giant like Alphabet sees limited payoff, the road for Aurora looks even tougher. The reality is that autonomous trucking will require massive capital to become a true commercial reality. Aurora does have a decent cash balance, but this space will demand billions in ongoing investment, constant regulatory hurdles, and flawless execution. For me, it feels more like a gamble than an investment, and I'm not comfortable putting money into it. At this point, I'll pass once again on Aurora. Before you go, don't forget to grab my free report. The 10 stocks I believe you can buy today and hold forever. It's packed with solid long-term picks you won't hear hyped up anywhere else. Just click the link in the description, enter your email, and I'll send it straight to you.